Hi everyone, welcome back. This is Ryan. I haven't made a video for quite a while because we haven't really had much price action going on in the cryptocurrency market. Everything's been going according to plan recently, so been no real reason to make a video update. But one thing I have noticed is a lot of people are talking about this rising wedge pattern, and I think it's going to mess quite a lot of traders up because a lot of people are thinking if we break up we go up, if we break down we're going down to set new lows, and I think it's completely opposite to that. I'm actually hoping for a breakdown first before I move up. I'll show you why, and I'll show you what I'm expecting to come in the next couple of days. So with this rising wedge pattern that everyone's talking about, depending on how you want to draw the rising wedge, you want to use candle bodies or the wicks, or we'll do both here. As you can see, we're coming up to a point where a lot of pressure's building up in this rising wedge that everyone's talking about. Volume is decreasing as well. So I do think we begin to get a move soon. But I think the first move is going to be the false move. So for a second now, if we draw some lines of liquidity on the chart, some previous points, some previous wicks that might not have been touched yet, upper and lower. If we're saying, for instance, that these lower wicks do need to be taken, and take some more liquidity from this full candle that hasn't been taken yet, a move down wouldn't be so surprising. But for anyone looking at the rising wedge and this sort of pattern gets broke and we move down here and take this liquidity, everyone would be saying, well, that's a move down now and we need to go set new lows. And I do think this move down is going to come first. I've put something on my Twitter a couple of days ago at the start of the weekend just to pre-warn everyone of what I thought was going to happen. I do think that's going to happen. I think we break down first, a bit of a false move to grab a lot of the liquidity that's down here, get a lot of people short before the next move up. So just to visualize, if we have the rising wedge drawn here, and a lot of people are waiting for this moment to be broken to go short and maybe catching a new move to lows, all the traders are going to come in, start shorting around these areas as we grab this liquidity. People's shorts are going to be increasing massively, and I think that would add fuel to the move up that I think's going to come. How many people have you seen going on about this rising wedge? You can't go on Twitter without seeing this rising wedge. You can't go on YouTube without seeing this rising wedge pattern drawn. The market makers know this, not silly. So we have to try and think about this in a market maker way. How can they grab as much liquidity as possible? So anyone who's looking for a move up and are thinking we're going to break this rising wedge upwards, they're going to have longs in place. They're maybe going to have the stops down here. They're maybe going to have stops down here. So the market maker brings the price down, grabs all this liquidity, takes out the longs. People start shorting. Maybe they do a couple of spikes to the low, 3 spikes to the low, and then move back up into the rising wedge. It's going to mess up all the traders, long and short, day traders. Anyone who's watching this pattern, I think they're going to get truly messed up by the market makers, and I do believe in the long term we end up coming back to this liquidity zone all the way up here at about $30,000. So intraday, short term, I think that's probably what may happen. There's a couple of wave counts as well in here suggesting that we do move up as well. It's looking more impulsive than it is corrective to the upside at the minute. But the wave count would suggest one drop coming down here, grabbing this liquidity, messing up the day traders. Market maker takes all the liquidity once again and then moves up to a point to another point of liquidity that hadn't been touched yet. So I do think that's what's to come. I'll go through a couple of wave counts now as to why I think that might be coming next. So on the smaller time frame, I think this is probably my favourite wave count at the minute, an impulse to the upside with an ABC correction. This impulse to the upside on Bitcoin has already proved quite valuable in Ethereum, which has moved up faster. So I think Bitcoin is going to follow. I think we're just putting in somewhat of an expanded or running flat here for Bitcoin, where our targets would be at the bottom of these Fibonacci's, taking all this liquidity around here. 22,000, 21,600 is what I would be aiming for. A normal retrace to coming in on this trend-based Fibonacci before then moving up. So that's my favourite wave count at the minute. ABC expanded flat correction, nice subdivision in these waves. ABC, we'll do another little trend-based Fibonacci see if we get any confluence, and there you go. You get more confluence here around the 22,200 zone. So would be eyeing up that zone for longs again, grab this liquidity, make people short, and again the market maker messes up the people who are watching that rising wedge. So don't forget, guys, it's not financial advice, just a quick update from me today. I'm not a financial advisor. I won't be listening to me for financial advice, but again, I hope this has been quite useful. We'll see if this happens. Take it easy, guys. Don't forget to like, comment, subscribe. See you later.